Hello and welcome to this video on financial statements of a limited company. We're going to look at the statement of changes on equity and the statement of financial position. So in this question number 1 here then, where the following figures are taken from the accounts records of Harvey Limited, a garden and landscaping company, at the end of the financial year on the 31st December 2023. So we've got Harvey Limited and we've got loads and loads of figures here. We've got issued share capital, 1% all shares fully paid. That means all of the people who bought the shares have paid the full amount for them. They're not paying them in installments, they're being fully paid. That's £90,000. Property at cost, we got as £165,000. Depreciation of property to date, so that's at the end of the year in this question, £5,500. Office equipment at cost, £20,000. Depreciation of office equipment to date, that's £2,500. Goodwill at cost is £40,000. Amortisation of goodwill to date is £8,000. Now, amortisation, when I think of that's similar to depreciation. Inventory, that's going to be our closing inventory, £20,750. Trade and other receivables, £47,985. Trade and other payables, £22,560. Cash and cash equivalents, £3,875. Bank loans repayable in 2026, that's £54,000. So our year end is the 31st December 2023. So if it's repayable in 2026, that means it's a long-term liability going in non-current liabilities. Profit for the year after tax is going to be £98,750. So that's our profit for the year. Corporation tax owing for the year is £19,500. Ordinary dividend paid, that's paid during the year, is £20,000. And retained earnings on the 1st of January 2023 is £16,800. Right, what have we got to do? So required. Prepare a statement of changes on equity for the year ended on 31st December 2023, together with a statement of financial position at that date. So I put down the templates to help us here to save some time in the video. It's got Harvey Limited, statement of changes on equity for the year ended on 31st December 2023, and we've got in our equity section, we've got issued share capital, retained earnings, and our total amount. Now, our statement of changes on equity starts with a balance at the beginning of the year. So in our case, that's the 1st of January 2023. So I want the issued share capital. I go to my list of balances and I find my issued share capital right at the top is going to be £90,000. Retained earnings at the 1st of January, I can see them right at the bottom of the list, it's £16,800. Profit for the year, I can find that it's profit for the year after tax, it's £98,750. And dividend paid, that's money going out, so it's going to be negative. So dividend paid, we were told, was £20,000. So that's our entries into our issued share capital column and retained earnings column for our statement of changes in equity. So now we need to total them up. So issued share capital is going to be £90,000. Retained earnings is going to be £95,550. Now we also got the totals going across. So going across there for balance of the 1st of January 2023, so £106,800. The next one is £98,750. And finally, we've got the £20,000 negative. So again, total the column up, and we get £195,550. Now you can check that that's correct, because these two figures here, the £90,000 and £95,550, also should total £185,550, which they do. So that's telling us we've got all our figures correct there. Now, on to the statement of financial position as at the 31st December 2023. So we've got non-current assets. The first category we have is intangible non-current assets, and the one we've got in this question is goodwill. So I want to go to my list of balances. I'm looking for goodwill now. I've got it here. Goodwill at cost is £40,000. Right, cumulative depreciation or amortisation for goodwill. I go back to my list of balances, and amortisation for goodwill is £8,000. So the carrying amount is your cost, take away your cumulative depreciation or amortisation, so that's going to give us £32,000. Now, our property, plant and equipment, we've got property and office equipment. So property, I go back to my list of balances, and we've got £165,000. Accumulated depreciation for property, that's property depreciation to date. I found that depreciation of property to date is £5,500. And for office equipment, the cost for office equipment is, so we go back to the list of balances, £20,000. And the cumulative depreciation or depreciation to date for office equipment, I've got £2,500. So the carrying amount now, so property is the cost of 165,000, take away the cumulative depreciation of £5,500, which gives us £159,500. Office equipment, we got £20,000, take away 2,500, giving us £17,500. Now we need to total the three columns now. And the cost comes to £225,000. Accumulated depreciation comes to £16,000. And the carrying amount comes to £209,000. Now again, we can check that because £225,000, take away £16,000 going across, leaves us with £209,000. Now the cost column and accumulated depreciation column we've now finished with, so we underline those. But the carrying amount column, we're going to use that figure in a while, so we do not underline it. Now we go to our current assets. We want the inventory. So the inventory, I go to my list of balances. Got inventory, £20,750. Trade and other receivables, again, I go to my list of balances. £47,985. And finally, cash and cash equivalents in my current assets. That is going to be £3,875. So that's all the current assets. So I'm going to underline the 3875 and total them up. And we get 72,610. Next category is current liabilities. That's our trade and other payables. So again, we go to a list of balances and look for trade and other payables. And I found here £22,560. Tax liabilities. Again, back to the list of balances. Got corporation tax owing for the year, so that's a liability. That's £19,500. So that's our current liabilities. So we total those two figures together. So it's 22,560 plus the 19,500 to give us £42,060. Now we've got more current assets than current liabilities, so we now work out the net current assets. So net current assets is the 72,610 for current assets minus the current liabilities of 42,060, which gives us £30,550. Now, so we've got non-current assets and net current assets. We now need to total them. So it's going to be the £209,000 plus the £30,550 to give us £239,550. Now, we've got some non-current liabilities because we've got a bank loan. So the bank loan is going to be a liability, so it's going to be deducted from the 239,550. So I'm going to put negative, and the bank loan in our list of balances is £54,000. So now for the net assets then, it's going to be the £239,000 and 550 minus the £54,000 to give us £185,550. Right, now we've got the equity section. So just me check this amount there. That should be 90,000. I'll just correct that. Let me just check my issued share capital into question. Yes, so we've got £90,000 issued share capital. So we just make a note of that down here. Issued share capital, at the beginning we should have £90,000. So 90,000 ordinary shares of £1 each. Here you go, all done. Let's put in the comma for us. So again, go to my list of balances. 90,000 ordinary shares of £1 each fully paid. I go to my list of balances right at the top if I remember. There we go, got £90,000. The retained earnings, and that's going to come directly from our statement of trades and equity. Retained earnings we worked out were £95,550. Now also, your issued share capital, again, that could also come directly from your statement of changes in equity, which is £90,000. So now with our total equity, we combine those two figures together, and we've got £185,550. So I'm going to check if that seems sensible. So that is the same as our net assets. So we just highlight those so we consider the same. If they're both the same, that suggests to us that we've done our solution correctly. It does not guarantee it's correct, but it makes a suggestion that it is correct. If they are different, then we'll know we need to look into the differences. But in this case, we've got both £185,550, so they are both going to be on our correct bases. So thank you very much for looking at this financial statements of a limited company. We have statement of change in equity and statement of financial position. I hope you enjoyed the video and found it useful, and I'll speak to you next time. Take care then. Goodbye.